All right, so Fabi, I have to start with you because last year on this panel, on this stage, we were talking about uranium and you said, I'm mortgaging my house to buy uranium stocks. Now,
that is actually not true. You can go back and see it. I didn't say that.
But obviously you were heavy into the trade, right? So I want to start here. It's been a crazy year for uranium. And it's been a long time since uranium's had a year like this. I just said when I introduced the panel that Rick Rule has been on this stage every year for 10 years telling the audience that, look, either the price has got to go up or the lights are going to go out. One of the two things has to occur here. And now the price is going up. So starting high level, macro outlook on the uranium sector, what are your thoughts right now?
So one of the questions that I'm hearing a lot is, okay, the trade is happening. Is there still time, to jump in? And people are kind of getting a little bit nervous about it. What I'd like to refer back to is the fact that, yes, uranium, the commodity, is finally at triple digits, which I believe is a 16 or 17-year high, which is great, awesome. But the issue is that the equities have, by and large, not reached their 2021 highs. So on a macro level, I look at the commodity itself versus the equities, and I ask myself, when have we seen a commodity bubble where the highs of the equities peak, and then 2 years later, the commodity goes up, and then it probably keeps going up, which we'll probably touch upon soon, and then the equities all just kind of die off. Obviously, some companies are doing really well, but by and large, we haven't seen the mania yet. So I'm looking at this market, and every time we talk about, hey, uranium is finally working, yes, the commodity is working, the equities are lagging, and I think there's opportunity there.
And Daniel, I want to pass the same question to you, but from the company builder standpoint, industry fundamentals, what should people be paying attention to right now?
I think the price has moved. We've seen that, but it hasn't actually dealt with the issues that are actually driving the market in the first place. We've still got a long way to deal with the fundamental reason of why uranium is up where it is. And it is a long-term problem. We're massively underinvested from an exploration point of view. We are 1/3 of where investment levels were back in 2007 and 2008. We're looking at this last year, 75% of all uranium came from producing mines. By 2040, producing mines will only account for 20% of all uranium produced. The rest has got to come from projects that haven't been built yet. And we know in our industry, projects always have a high level of risk of actually not arriving. So that fundamental issue is coming through. From a supply point of view, we're dealing with a problem of bifurcation out there. It's massive. If you look at the largest growth rate out there, it's China. China's going to go from a demand point of 11,000 tons of uranium a year last year. By 2040, it needs 44,000 tons of uranium. Its single source at the moment, or 2 points, Kazakhstan and Namibia. Kazakhstan's coming to the point of plateauing out of what it can do without going forward, which means where does the single growth player have to go to get its uranium? It can't buy from Canada, it can't buy from Australia. So like many other commodities, we're now getting competition globally about where does your source material come from in a situation where you need projects to build it. So we need higher prices still, but we need projects to come through. Massive risk if they don't get delivered on time.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode. Okay, thank you for that, Daniel. And thank you, Fabi, for the distinction between the commodity price and the equity price, often not correlated, right? Lobo, similar question to you. I'm wondering if you have some rain for the bull parade, but we'll get into the investment opportunity in a second, and I got a bunch of questions for you, but for now, on the macro standpoint, do you agree with this sentiment, or do you think the commodity price itself is running away a bit too hot, too quickly? What's your take?
Well, a year ago, we would have said the incentive price would be 70, 80 bucks. So at 106, chart goes like this. How long can any chart go like this? Sorry. Now, I say this lovingly as a bull. I'm a uranium bull. I'm a multi-year, maybe multi-decade bull, as for what he just said. I agree completely. But the chart just went like this. Don't let that go to your head. And so the answer is a little bit more nuanced. My concerns are just this year. Like going forward, uber bull. This year, high prices, do what? We have the low-hanging fruit coming online, and yes, everybody's talking about Kazatomprom, saying, well, we may not be able to ramp back up as much as we want, but it's not, we're going to produce less, it's not ramp up as much as we thought, maybe. And we have the low-hanging fruit, it's being built. There are mines that are coming online now. And my big concern is, and by the way, I think even all that low-hanging fruit, even if Kazatomprom and Cameco went completely nameplate, and the DASs of the world and the bosses of the world, if they all deliver, I actually still think that's not enough to meet the demand. But there is this new secondary source of supply. All these people that bought at $30, $40, $50, you bought at $50 a pound as an institution, and now you're sitting on a double. You didn't buy this like Sput to sequester it forever. You bought it to buy low, sell high. What are you going to do when you're sitting on a double? I am not saying the uranium price is about to tank. I'm saying there's a new variable here. This has never happened before. We don't know what will happen. I don't know how much of the secondary supply will come onto the market. But it is a variable for this year. So all I'm saying is don't mortgage the house. Don't let irrational exuberance carry you away. I am a bull, but remember, you don't want to be a blind bull. There is a sword behind that red cape.
Okay, I appreciate that. And you're often the guy on Twitter calming that exuberance down. It's like Lobo by the dip Tigre, right? And so is now the time, therefore, for investors to just hit the brakes and be patient, because there's a lot of folks, right, that are scared of missing the train, right? FOMO's powerful.
No, FOMO
really
is
powerful.
Never a good idea. I mean, the chart just went like this. That is never, okay, it could go higher. Right? If Kazatomprom really falls on its face and Greta Thunberg gets out there and says more pro-nuclear things, this could become the flavor of the day. We could be 150 bucks by mid-year. That's not a promise or a forecast. I'm saying that could actually happen. Right? In a world that could happen, you don't want to be short. But the chart just went like this. If you're long already, don't mortgage the house. That's all I'm saying. Have a sense of proportion here. And if, as a cautious speculator, not a wild gambler, I would look for the dip. We have been for 5 years in a 2 steps forward, 1 step back, sawtooth pattern. We've just seen a massive step forward. The history of the last 5 years, the history of this bull market is that there will be a dip. So that's when I would look to deploy personally.